Hey everyone, welcome. We got that closing bell for Monday, June 17th. I was expecting a quiet and muted day, and we did not get that. We started out that way, but certainly by the time we hit mid-morning, we definitely got some direction over here. So you can see that in the morning, mostly muted. We did come and challenge this 534.87 level, and then we broke out of it, and then we just kept on going until the very end where we pulled back a little bit. So what we want to do is analyze this and say, is this a real move? Is there a volume behind it? Is it just a couple of stocks, or is it a broad spectrum of stocks, a broad spectrum of sectors, and whether or not we think this can continue. So before we get into all of those details, I will say that normally when you have a big move, you need to digest. So given that we have the holiday in the middle of the week and we don't have much data and it is the summer, we are going to expect, even without looking at anything else, we would expect that the next few days would be quiet. Sort of like this, a gap up and move, and then the next few days are quiet. A gap up and move, and the next couple of days are quiet. Another move up, and the next couple of days are quiet. So normally, when we have a big move, the next few days are quiet because the market has to digest that movement. So already, just from the fact that this bar was larger than any of these bars over here, then we're going to expect that the market will need a little bit of time to digest that movement. 1 day, 2 days, well, it only has tomorrow basically before the holiday on Wednesday. So it should just be just Tuesday, Thursday. And then we have the report coming out on Friday. No, not report, the quadruple riching coming out on Friday, and that can introduce a whole bunch of volatility. So uh, if this caught you off guard, well, if you're neutral in your portfolio, you really should still be balanced. Shouldn't have affected you that much. If you are, if you're bearish, I don't know why you would have been going into this. Then you're certainly hurt a little bit, but you don't have to panic because most likely it will just chop sideways. So let's take a look at the overall picture and see what happened over here. So TLT, it did gap down, traded up a little bit. So we got a little bit of support in that TLT. Let's look at what happened in the dollar. Dollar came down a little bit, so that helped go up. Okay, so let's take a look at, well, what we really want to do is look at first we'll look at the indices versus their equal weighted. Then we'll look at the sectors. Then we'll look at the individual components of each of the indices. So the SPY went up 0.79%, so 0.8%. And then look at the RSP. RSP went up 0.7%, so similar. But we can see that we're really just chopped sideways in the RSP. It's not like the SPY where it made an all-time high. So that's not too comforting right now. So that's not a really bullish case. Let's take a look at QQQ. QQQ up 1.23%. So it definitely does look like tech was leading the move in the S&P 500. We'll verify that in just a few moments. And then let's look at the equal weighted. Also up 1.1%. 1%. QQQ was up 1.23. So similar. And we are, at the very least, this is looking way better than the S&P equal weighted. And we are challenging this all-time high over here. So different stories between the SPY and the QQQ. So it looks like maybe we're getting broad-based support in the QQQ. So we're getting broad-based support in tech and then consumer discretionary. So that is better news, but it would have been much better news if we saw the same type of action in the S&P 500. So at the very least, it looks like we are still we're still looking at mostly just the tech sector pulling this market up. So let's take a look at our sectors, then we'll look at individual stocks or individual components of the major indices. Let's take a look over here. And we'll just take a quick look at the sectors. SMH up really big and XLY up just as much. So we did get broader base participation in the QQQ. Retail, which is part of discretionary, tech in general, QQQ. So yes, we got broad-based participation over here. The only thing missing from here is communications. Communications didn't go up as much, although it did go up at 0.6%. Okay, so we also got some, interestingly, we got the staples up and industrials up as well. So we've got a little bit of a mixed bag here. And that is generally indicative of choppiness, sideways trading, not of a clear bullish movement upwards. We normally have all the risk sectors stacked, then the medium risk sector stacked, and then the defensive sector stacked. So this is weird. This is a mixed bag that we're getting right now. So basically fragmentation. And to cure fragmentation, we need to at least consolidate or pull back. Let's take a look at the individual components of the QQQ. Okay, so we do have a good number. So the QQQ went up 1.23%. So I'm going to be interested in the ones that, the individuals that went up at least at 1.23%. It looks like there's quite a number of them. Right, so this is a rough estimate, about 40-ish. Let's export this and find out. This looks like we still have some spillover from earnings. Okay, yeah, about 40 stocks. So roughly evenly split. There is slightly more stocks that didn't move 1.23%, but when we see how many stocks moved positively, then there's only 22 of them that went down. So this is pretty much broad-based participation. There's a lot of this index, a lot of the stocks in the index actually went up. So that is looking good for QQQ, but let's see if we have the same thing in the S&P 500. Right, so 0.79, I believe the SPY was. Yeah, 0.79. Okay, it's like a reasonable number of stocks, but it's harder to say because it's crossed about 500. Okay, 0.79. I need to sort these. Okay, so about half. That's pretty good. But then when we look at the weightings, do I have market cap? Market cap. 82 divided by, why do I have a negative? Oh, that's weird. I have negative market caps in here. Okay, that should fix it. No, it didn't fix it. Okay, well, I don't know why there's negative market caps here. That's really strange. So, I messed up. Okay, I got it. Okay, so we need the absolute value of the change times the market cap. No, that doesn't make sense. I think I had it right the first time. But why would the first one be negative? The sum of my market caps is negative. Okay. Well, I don't know. I'm getting bad market cap data, so unfortunately I can't look at that weighting. So what I can say is that I can use a heat map. Forget. So let's just do this heat map. Okay. So roughly half, red and green. Definitely the larger market cap ones are positive. And these two giants right here at one point, they're above the 0.79. The Broadcom is definitely above Qualcomm, MU. So it looks like yes, we are being dragged up by these large market cap stocks, but it's not as big of a disparity as what we've seen in the last week or two. So it looks like we are maybe getting a little bit of broader base participation than we had in the past, but it's still not to the point where we're really comfortable about the strength of the market. So let's take a look a little bit more closely at our sectors. We're mostly concentrated in the SMH, XLY, XLK retail. Let me look at XLP and XLI because those are kind of up there also. XLP. Yeah, that's a strong bounce. That's a similar bar, right, basically right here, undoing that move right there. So I'm not going to get too excited about it. And then XLI, that is definitely a very large bar. If I measure high to low, and high to low, it's similar to this one though, and similar to this one, and smaller than this one. And also chopping sideways below moving averages, going up into resistance. So I'm not going to get too excited about XLI either. Let's take a look at retail. Retail, larger bar, but similar to this one, and this one, and this one, and up into resistance. So can't get too excited about that yet either. We would need to pop up above that resistance. XLY. XLY is different. That's a very large bar compared to anything that we see over here. It's more similar to this one, but it did break above this high right here. And we've got some, maybe a little bit of resistance. Look at that volume profile. Okay, no, we poked, at least for the last 200 days, we poked up above any sort of resistance or prices or the supply prices over here. So it's looking pretty good, XLY. Okay, and XLK, a new time high or all-time high, SMH, new all-time high, SMH, and new all-time high over here. Both of those trending very well. XLK, a little bit more aggressive, maybe at the verge of very, very, very verge of becoming parabolic. Not definitely not at the end of a parabolic curve, but looks like it might just barely start to become parabolic. SMH is just very steady. So definitely tech is strong and stronger than the other sectors. We just got a little bit more participation. Let's see how we're doing on our volume today. And we're 16 minutes in, so we should have gotten our dark pool stuff. So still a little low, 50 million versus the 57 million average. And that, of course, has come down from the low to mid 70 millions. So muted on the volume, although better than last week. and then a movement that is a little bit broader based, but still mostly being held up by tech. So I'm not going to get too excited. I'm going to basically conclude with what I started with, which is this is a strong move upwards. And for the rest of the week, we don't have a lot of stimulants. We don't have hugely broad-based participation. We don't have a lot of momentum. We don't have a lot of volume. And we have a fragmented week because of that holiday that's smack in the middle. So at least for tomorrow and Thursday, we're probably not going to expect a continuation. We would just chop. If we do get to continuation, just be random movement up, not a huge surge up. So how do we play this? Well, if you're already neutral in your portfolio, you do nothing. So you're in good position. If you're bearish, then do you have to panic? No, but the next few days are most likely going to chop sideways, so there should be plenty of time to close out your bear positions if you need to. If you feel the need to neutralize it by closing, or you can neutralize by going some longs. And then if you're bullish, then I would say watch out because you might get chopped out. So depending on how much time to expiration you have, if you have a very large theta component, if you have a very large time decay component, then I would consider taking profits. Otherwise, you may want to neutralize by finding an offsetting bearish position. Okay, so we did get an unexpected move today, and it was a little bit more exciting than I thought it would be. But overall, the forecast for the rest of the week is the same. We're not going to expect too much to happen until Friday. Okay, so that's it for today. I'll see you guys tomorrow morning and see if I'm wrong again and we get even more excitement. Have a great day, and I'll see you tomorrow morning.